Welcome to Banking Diary channel, my dear friends. In this video, we are going to see about Prudential norms on income recognition, asset classification and provisioning pertaining to advances. This guideline has come into effect on the recommendation of Chairman M. Narasimhan Committee. Then we are going to see about non-performing asset. Before going to see about non-performing asset, we can classify what are the liabilities and what are all assets. Liabilities means that all the term deposits and current accounts, saving accounts which are in bank books are called as liabilities because bank has to pay the amount to the customers whenever they demand. So these are liabilities to the bank. Then what are the assets? All the loans and advances which are given to the customers are called as assets because it generates income and it returns to the bank. Then what is meant by non-performing asset? An asset is a one which is going to generate income to the bank. Then what is non-performing asset? When the asset or when the account is not going to generate any income to the bank, then it is called as non-performing asset. Then we have to see about the definition of non-performing assets. What are all the definition for an account becoming non-performing asset? Whenever any principal or interest is overdue in an account for more than 90 days, it is called as non-performing asset. In the case of CC or overdraft account, that is cash credit or OD account, is out of order for more than 90 days, then it is called as non-performing asset account. Then whenever the bill remains overdue for 90 days, more than 90 days, it is called as NPA. Then in case of agri advances, we are going to classify as short-term crops and long-term crops. Short-term crops means that less than 1 year. Long-term crops means more than 1 year. Then if any account which deals with short-term crops for more than 2 crop seasons, there is no income for that account, means that big account becomes NPA. In the same case for the long-term crops, if more than 1 crop season there is no credit for the account, means that account becomes NPA. In the case of liquidity facility remains outstanding for more than 90 days, then it is also called as a NPA account. Any derivative receivables not paid after the due date for more than 90 days from the due date of the derivative receivable, then it is called as NPA. Then we have to see the two definitions. That means that the term out of order and overdue. Out of order means that when there is no credit in the account, it is called as out of order. This account mainly comes under two categories. One is overdraft, another one is cash credit. In overdue, all term loans comes under overdue category. Whenever any amount due to the bank is not paid on the due date fixed by the bank, it is called as overdue. If any term loan which is due on 30th of a month is not paid on that particular date, then that account becomes overdue. Next we can see about income recognition policy. Bank should not charge and take into income account interest on any NPA account which means that after becoming an account NPA, the bank should not charge any interest in that account. That is the meaning for this. Second one, if government guaranteed advance becomes NPA, it should be considered as income when it actually realized, because all government securities guaranteed advances will surely return back to the bank, even though if it becomes NPA. The thing is, we have to recognize it as income when it is realized. That is when the amount is coming into the account from the government. Now we can see about asset classification. The accounts which generates income regularly are called as standard accounts. Other than standard accounts, there are three types of them. One is substandard, second one is doubtful, third one is loss account. Substandard accounts means that after becoming NPA up to 1 year, it is called as substandard account. In the case of doubtful asset, from after becoming an account in substandard, another 12 months, that is up to 2 years, it is called as doubtful. Then loss account. What is loss account? Any account which is identified by the bank or internal or external auditors or recommended by the RBI is called as loss account. Now we can see about provisioning norms. For all the NPA accounts, non-performing asset accounts, the bank has to make provisioning. For in case of loss asset, it should be provided with 100%, which means that if it is 100 crore of advances which goes for loss, then the bank has to make provision of 100 crores. Like that. In next we can see for doubtful assets, we are classifying it as unsecured. In the case of unsecured doubtful assets, we have bank has to make 100% provision. For secured asset, here three classifications are coming. One is doubtful 1 D1, doubtful 2 D2, doubtful 3 D3, which means that D1 means up to 1 year secured assets 20% bank has to make provision. For D2 type of accounts, that is doubtful 2 accounts, that is from 1 year to 3 year, the bank has to make provision of 30% of the loan amount. For the case of doubtful asset D3, which means that above 3 years, the bank has to make 100% provision. For the case of substandard assets means that which are NPA up to 1 year. For unsecured substandard accounts, 20% of provisioning should be made by the banks. In the case of secured advances, 10% should be made as provision by the banks. In the case of standard assets, bank has to again make provision. For agri and SME advances, 0.25% of the outstanding amount has to make provision. For other loans and advances, bank has to make provision of 0.40%. In this video, we have seen that provisioning norms, what is mean by NPA, income recognition policy, types of assets, which means that asset classification, all these things we have seen. For the case study, we will see in next video. Thank you friends.